Preparing for your future as a young adult is crucial, and one of the most significant steps you can take is to invest your money. You may believe that you need a considerable amount of funds to start investing, but beginning with small amounts is now easier than ever before. By creating investment accounts, you can save money for various goals like purchasing a house, future travel, or retirement. However, before jumping into the market, it is essential to prioritize paying off any high-interest debt that may be causing financial strain. Building an emergency fund with enough savings to cover at least 3 to 6 months of expenses is also important. Once you have handled these initial steps, you can start investing even with a small amount. Developing a consistent approach to saving and investing will help you remain committed to your plan in the long run. Number 5. Investment risk warnings. Investments can indeed have both positive and negative outcomes. While investments have the potential to increase in value, providing investors with profits and returns, there is also the possibility of investments decreasing in value. The value of investments can fluctuate due to various factors such as market conditions, economic changes, geopolitical events, and company-specific factors. It's important for investors to understand that there is no guarantee of receiving any income from their investments. While some investments, such as dividend-paying stocks or bonds, may provide periodic income in the form of dividends or interest payments, others, like growth stocks or certain types of funds, may not generate regular income. Additionally, even investments that do generate income may not always provide consistent or expected returns. Number 4. Investment goals. Before embarking on your investment journey, it's essential to consider the objectives you aim to achieve. The type of accounts you open for short-term goals like travel will differ from those intended for long-term retirement goals. Additionally, it's vital to assess your risk tolerance by reflecting on how you will react if an investment performs poorly. Since your 20s offer ample time to recover from losses, it may be an ideal period to take on investment risks, particularly for long-term goals. Therefore, prioritizing riskier assets such as stocks may make more sense when you begin investing early. After defining your goals and devising a plan, the next step is to explore specific accounts that align with your investment strategy. Number 3. Take advantage of work pension. Although it might appear premature to begin making arrangements for your later years, it's worth keeping in mind that you may have a retirement period of 20 years to account for, and a source of income will be essential. A workplace pension can serve as one avenue to secure a steady income stream, with the added benefit of receiving contributions from your employer and the government in addition to your own. Generally, the sooner you commence paying into a pension, the better, as your money will have more time to accumulate. Even a modest sum saved during your younger years has the potential to grow significantly over time. Number 2. Increase your savings over time. One of the most beneficial actions to take in your 20s is to establish a savings target that you can follow to and develop a plan to gradually enhance it. Creating a habit of committing to a fixed savings rate and incrementally increasing it year after year can have a significant impact in the initial stages of your savings journey. Beginning this practice early on will also make it simpler for you to manage your finances in the future without having to resort to extreme measures to achieve your long-term financial objectives. Number 1. Little responsibilities. During your early adulthood, you may find that you have more time and independence than financial resources, making it tempting to spend all your earnings. However, this phase also offers greater flexibility as you have fewer commitments. It may be easier to cut back on some expenses to ensure you save more for your future. There are compelling reasons to adopt this approach. You may have midterm goals such as starting a family or purchasing a home, and with focus, you can also establish long-term objectives. It's important to avoid a situation where you can't afford to retire or maintain a comfortable lifestyle after a lengthy career. Remember, investing early is a gift to your future self. Start today, be patient, and watch your money grow.